Following breaking news on Wall Street with stocks tumbling right now. All three indices showing sharp declines today. Let's go live to CNN business and politics correspondent Vanessa Yurkevich. Vanessa, walk us through what's behind this decline.
Well, markets opened rattled this morning because Beijing was essentially putting pressure on their trading partners not to work with the U.S. On essentially not trading with China any longer. And then after that, there was a Truth Social post by President Trump that came out, which sort of rattled markets again. And that's why you're seeing that steep decline. The Dow down 1,100 points now. But you can see the post right there where he's essentially calling on the Federal Reserve to cut rates. This is something that the president really has no power doing. And when he talks about Mr. Too Late, he's talking about the Federal Reserve Chair, Jerome Powell. Over the last week or so, he's really ratcheted up his pressure on the Fed chair, essentially calling for his termination, saying if I could terminate him at some point, I will. The president appointed Jerome Powell in his first term. President Biden re-upped him for his second term. And ultimately, President Trump there, though, saying that he has the power to remove the Fed chair, Jerome Powell. But that is not necessarily the case here. And there's some legal precedent for that says that the president does not have the authority to remove the chair of the Federal Reserve unless there are three sort of different qualifications: inefficiency, neglect of duty, malfeasance of office. So that is why there's so much question about whether or not the president has the power to make this move. But this is why you see markets rattled right now, because the Federal Reserve is an independent body from the government, and it acts sort of as a safety net for the U.S. economy. And when you have the president threatening to remove the Federal Reserve chair or trying to direct the Federal Reserve to make any sort of monetary policy, that rattles investors and traders who see this Federal Reserve Bank as sort of an independent catch-all for potential issues with the economy. And one of those issues, Boris, as you know, that is playing out right now is this global trade war. Many economists believe that this trade war, as it escalates, will increase prices for everyday consumers. And the Federal Reserve really is the sort of counteractive in that, the body that can help try to bring down prices if that were to happen. So traders, investors nervous about this language that they're seeing from the president right now. The next time the Fed will meet is in May, and that is when they will make that policy decision about interest rates. But it is up to the Federal Reserve. It is not up to the President of the United States to make those directives.
We're joined now by Joe Weisenthal. He's the co-host of Bloomberg's Odd Lots podcast. Joe, thanks for being with us. Let's start on how markets have responded to this spat with Powell. You actually posed the question of what Trump would get from firing him. Isn't the answer that simply he would get a Fed chair who would do what he says, a more subservient Fed chair?
He might. And that's probably what he has in mind if you were to go through with firing him. But the point that I want to make, and the point that I think maybe markets are reflecting is, okay, you could imagine Powell being replaced by someone who is quicker to lower rates at signs of volatility or quicker to lower rates at signs of economic slowdown. But the investors and markets, their fear about inflation, their fear about the short-term inflation due to tariffs, they're concerned about, sort of long-term rise in inflation expectations. And there's the risk, and there's the very real possibility that even if you got a Fed chair who was willing to push through, and bear in mind, there's 12 members of the FOMC, so you can't unilaterally push through lower rates. Even if you got a Fed chair who was able to immediately push through lower rates, that might be seen as more inflationary. And then the market might think, okay, well, now we have to raise rates further and harder into the future. And that's how you get the rates at the long end. And those rates at the long end, say a 10-year yield, that's what your mortgage is priced off of, something like that. So even getting in like a true lackey wouldn't necessarily stimulate the economy in perhaps the way that Trump is imagining. What it would do, though, is weaken the expectation that the U.S. has an independent central bank, which is sort of like one of the foundational elements of global macroeconomic policy.
Yeah, I do want to get your thoughts on where we are in the U.S. trade war with China. It seems the Trump administration is still waiting for a call from President Xi that they suggested he should make like a month ago.
I mean, even setting aside China, so obviously about a week after Liberation Day, actually, I think it was exactly a week. They sort of dialed back the tariffs on the non-China world. And they're like, all right, these are going to be down to 10% for 90 days. We're not even getting those deals. Like a trade deal with Japan, which is a longtime trading partner, an ally, like that should be a gimme, right? Like it shouldn't be particularly hard. You could imagine, say, something where like Japan agrees to buy, more soybeans or liquid natural gas or something like that. We're not even getting that right now. And the messages that I've seen in various reporting says that's going to be a slog. So then think that's Japan. And then you have to think, okay, then there's the EU and Korea and everyone else. And all this is before you even get to China. So I think people are looking at the fact that, there is this clock that's ticking, and we're not even getting what should be the easy trade deals or the natural trade deals that you would want to imagine if we were going to sort of build this, global trading bloc excluding China. And so, every day that this goes on, there is damage theoretically, or people perceive there to be damage to the economy that's not easily reversed. It also shows that, the longer it goes on without some sort of reversal, that the market is not, that the White House is not particularly sensitive to market declines for the pace of policy.
Joe Weisenthal, very much appreciate the perspective. Thanks for joining us.
Thanks for having me.
Well, they clearly don't like the uncertainty that all of this is causing, right? And we're seeing this play out with foreign investors pulling out and more investment in foreign stocks and that kind of thing. So we're going to keep tracking this for sure. Vanessa Yurkevich, thank you so much. And joining us now is Republican Congressman Carlos Jimenez. Congressman, I want to get your take on what's happening with the markets. Should President Trump stop his attacks on the Fed Chair, Jerome Powell?
I'm not going to tell the president what to do. Look, I've been on your show before, and I said that this is the result of resetting commerce with the United States of America. And so we've been used to commerce being one way, where people put tariffs on us, but not so much us putting tariffs on them. The president's just trying to reestablish a new reality, a new norm. And when that happens, you're going to have waves, and you're going to have the market go up and down until this all settles out. And so I still have confidence in what the president is doing. He is trying to make commerce and trade fair for America, which has been historically unfair to America. And again, it's going to cause ripples. And so again, I think we just need to ride it out.
So there's the issue of the tariff policies, but then there's the separate issue of President Trump bashing the Fed chairman repeatedly. Clearly, he wants him to lower interest rates. That's something that he is not indicated he's going to do right now. And the Fed chair has obviously been, speaking out about the trade policy and the impact it can have on the economy. Do you think that the president can fire the Fed chair?
I don't know. And so I guess if he does, I guess we'll figure it out. I mean, there's uncertainty, even with your reporter. There is doubt whether he can or he can't. So I really don't know if he can or he can't. If he can, then the Fed has never really been independent, because I'm sure the chairman knows whether the president can fire him or not. And so we'll find that out if it happens. I hope it doesn't get to that, and I hope that they can resolve their differences.
Right, because the law in the book says that the Fed chair can be fired for cause, right? And that's really the big point. And the reason that there's independence, as she laid out, is for investors to know that something's not going to happen just because of a presidential policy